Executive communication. State a thesis clearly in investor letters. Welcome. In this micro lesson, we'll build a crisp, persuasive investor letter that busy readers can grasp in seconds. Your job is to state a clear thesis in one sentence, explain why it matters now, and do it in plain English. No finance jargon required. You'll signal confidence without hype by grounding claims in numbers, not adjectives. Think of it as a memo to a smart colleague. Brief, direct, and useful. By the end, you'll know exactly how to structure your argument so investors can quickly say, "I get it, and I see the upside." Use this blueprint to remove guesswork. Start with, "We believe company will, outcome, because driver." One sentence that states what happens and why. Add time frame, XY years, return, range to set expectations. Clarify your edge. Unique insight or advantage, such as proprietary research, channel checks, or a contrarian reading of public data. Finish with evidence. 1 to 2 strongest facts that directly support the outcome. Keep each piece tight and measurable so a reader can test the logic, not your writing style. Your thesis must read like a decision, not a brochure. Cut jargon and buzzwords like synergies or paradigm shift. Use one idea per sentence to prevent dilution. Prefer numbers over adjectives. Say, revenue plus 18% year over year instead of strong growth. Write an active voice. Spell out who does what, by when. Management will expand into 400 stores in Q2, not expansion is expected. Precision builds trust and helps investors model outcomes without guessing what you meant. Lead with the core metric or trend that drives the story. Unit growth, pricing power, churn, or margin expansion. Name the catalyst and its probability. For example, FDA decision in Q4, approximately 60% likelihood based on prior data. Address the main risk up front to show balance and control. Supply constraints, regulatory delay, or competitive pressure. Present a base case, not just the bull case. What happens with conservative assumptions? Readers should see downside protected and upside plausible within a clear timeline. Follow this 4-line format. Line 1. Thesis in 20 to 25 words. What changes, by how much, and why? Line 2. Catalyst plus timing. The event that unlocks value and when it likely occurs. Line 3. Evidence. 2 data points. The tightest numbers that validate your claim, tied to the driver. Line 4. Risk plus mitigation. State the key risk and how the company or thesis manages it. This structure forces clarity, keeps readers engaged, and makes your logic easy to challenge or agree with quickly. Here's a plug-and-play draft you can adapt. We believe ABC can grow EPS approximately 15% CAGR over the next 3 years due to pricing power and channel expansion. Catalyst. A price increase plus a new distribution deal expected within 12 months. Evidence. Current 30% under-penetration in core regions and 45% gross margin runway from mix shift and automation. Risk. A new entrant compressing price. Mitigation. High switching costs and multi-year contracts that protect share. Swap in your facts, keep the logic tight, and you're done. Before you ship, run these quick filters. Be specific, not promotional. Net retention 118% beats customers love us. Replace vague words with data. Fast, significant, and robust are red flags. Use short paragraphs and white space so the thesis is scannable on a phone. Aim to read aloud in 30 to 40 seconds. If it's longer, you're adding fluff. The right tone is confident, calm, and testable. Let numbers do the convincing. Your voice simply guides the reader. Pressure test your draft with 4 questions. 1. Can a smart non-expert explain it back? If not, simplify. 2. Does it fit on 5 to 6 short lines? Trim until every line earns its place. 3. Are numbers sourced and recent? Cite quarter, report, or dataset date. 4. Close with position size and monitoring plan. State initial weight, add/trim triggers, and the 2 to 3 metrics you'll track. If all 4 pass, your investor letter is clear, credible, and ready to send.